Fox Business Alert, after running up more than 30% year to date, ARM is the worst performer on the NASDAQ 100 right now, on pace for its largest percent decrease in a year. The chip architecture leader's earnings report was in line with expectations and posted its best first quarter revenue in company history. But investors saw maybe a chink in the armor in terms of licensing revenue, and it forecast fiscal second quarter profit below Wall Street estimates. But lost in those disappointments was a huge development. ARM finally confirmed the years-long rumor that it's working on developing its own homegrown semiconductor. Will maybe some fears out there that manufacturing its own chip will cost ARM an arm and a leg come to pass, or will near-term spending to make that happen give the company a leg up in the AI arms race? Joining me now, ARM CEO Rene Haas. Rene, thank you so much for joining us. Let's just get this out of the way. The stock is selling off, but no fewer than 9 brokerages at this hour have raised their price targets to a median of about $155 a share. It's at $140 and change right now. So they see something here that's positive. Tell us why investors who are selling the stock are wrong to do so right now.
Well, thank you for having me today, Liz. As you said, the company has a lot of positives going for it. And we've never done $1 billion in the first quarter. Our royalties were up 25% year on year. That's huge growth. Additionally, our compute subsystems are our new technology. We have 5 now in production, 3 new wins this last quarter, 2 in the data center, 1 in PC. And also, we remarked on the earnings call yesterday that we anticipate somewhere this year that our overall data center compute market share will be over 50%. So there's a lot of good things to talk about with ARM, and we're very, very happy with the quarter we just talked about.
Well, yeah, one of the things that you talked about, it was kind of a mic drop moment last night on the conference call. You finally confirmed what we've been asking you about for a couple of years, the rumor that you're going to develop your own chips. What kind of chips are these? I heard the word chiplet thrown around. Can you explain to our viewers what a chiplet is, and would the chiplet eventually become a bigger chip that goes into much bigger operations?
Yeah, well, thank you. What we said explicitly was we are exploring, and just to be clear, we didn't make any commitments towards anything, but we did say we are exploring this. And when you think about a system on chip, today, when you look at inside a system on chip and you take the lid off the package, if you will, what do you see inside? Sometimes you see one large chip. Sometimes you see a lot of small chips called chiplets, and those are connected together for a large system on chip. Now, some of those chiplets use our compute subsystems, and in some cases, they use the entire compute subsystem from ARM. So one of the things that we're looking at possibly is, when we supply these compute subsystems, do we take the next step and supply a chiplet itself? It's one of the areas we're looking at. There's such growth going on inside our industry right now, Liz, particularly obviously with all things AI, and also the fact that AI is going to find its way from the data center to the smallest of devices. And ARM is the only compute platform that can solve the AI problem from milliwatts to megawatts. So we're looking at everything.
You already sell your technology, your blueprints, to just about every chip maker out there: AMD, NVIDIA, Apple, Google, Samsung, Taiwan Semi, just to name a few. I saw a report put out by JP Morgan right after you announced that you might be making these homegrown chips, and they said the new chip strategy positions it to compete with its own customers and could lead to conflicts of interest. They went on to say, we are a little bit concerned, increasingly concerned with its strategy to develop full chip solutions. Why shouldn't an NVIDIA or an AMD look at your effort, or your at least consideration of making these chips, as some type of threat?
Yeah, again, let's look at chiplets, right? So chiplets that contain ARM IP could combine with other chiplets that could go into a large chip. So in some of those cases, we might be working directly with the folks who make chips, or equipment manufacturers who make cars or phones, et cetera, in data centers. So there is a lot of possibility. And one of the things that we've seen in our industry continuously, Liz, is that innovation always needs to take place and drives where the customers and markets are going. AI is really creating a brand new landscape with the software and the hardware being combined. So that's how we look at it. Relative to the conflicts you described, and there's conflicts all the time that take place in business. They can be managed and will be managed. We're looking at everything very carefully. But as I said, this is really being driven by what we see as the huge demand for growth, all driven by AI.
Well, AI, you talk about that, and then you talk about the data center push. We just heard Microsoft say they're going to move their $80 billion spend this year to $120 billion. Satya Nadella also said 400 data centers they operate right now in 70 different regions. How much of that business does ARM capture?
Yeah, so if you look at the data center business in general, prior to this year, our CPUs were probably about 18%. The big watershed moment for us took place really with these explosion of AI data centers, and now NVIDIA moving from their Hopper generation to their Blackwell generation. On the Hopper generation, we were basically 0% market share. And on Blackwell generation, we're close to 100% market share.
Wow.
That's a big shift for us. And then with the growth of AI data centers, combined with ARM gaining growth in general purpose compute, for example, at AWS, Graviton, 50% of new AWS servers use Graviton, which is ARM based. So when you combine the general purpose compute market and the AI data center compute market, that is our market share growing to 50%. And then when you layer on top of it Stargate, I think, as you know, I'm on the board of SoftBank, and I'm heavily involved with the Stargate effort, which is putting multiple gigawatts of data center capacity in the United States for AI and OpenAI specifically. That's another huge opportunity for us.
Okay, Stargate, you brought it up. I was ready to bring it up, and I really want to delve a little bit more deeply into this. Where does it stand? And I'm thinking about the situation with, it was back in the spring where Bloomberg had a report that, oh my gosh, Microsoft's getting nervous. They're going to pull back on some of their data center leases. They're going to shrink their plans. Well, that has not come to pass. Maybe there was a moment where Microsoft considered it, but it was never confirmed. And then you had the Wall Street Journal a week or two ago saying, oh, Stargate's going to downscale its first effort on the Stargate data centers. Can you clarify any of that? And if so, and if not, let's put it that way, I would just think that on the heels of the Microsoft and Meta news that they're spending more, that Stargate will still be a $500 billion project.
Oh, yeah, no question. I think Sam Altman was together with Masa a week or so ago at SoftBank World, and they were talking about 10 gigawatts of potential coming from Stargate, which is even beyond the $500 billion. Right now, you see it with Meta, you see it with Microsoft, you've seen it obviously with other hyperscalers. People are not, taking their foot off the gas relative to the AI investment. If you look just, for example, if you play with ChatGPT and you ask it a query, and it's thinking, that is the delay being caused by not enough compute. And as AI becomes more ubiquitous and there are more and more users, whether it's personal users, enterprise, the demand for these tokens, tokens being words that come out of the AI, is just going to go up. So right now, it still seems like we're seeing no end to demand in sight for compute. And Stargate will be a huge benefactor of that.
Okay, so can I say that the Journal might have been a little ahead of its skis on saying it's just going to be scaled down to something tiny in Ohio?
Yeah, I think some inaccuracies there. Again, Sam, I think, clarified in a statement from OpenAI that already there's work going on right now relative to deployment of sites. So I think nothing to worry about with Stargate.
Well, it just feels like no matter what, ARM is somewhat at the vanguard of all of what's happening. We'll continue to watch it, and we'll watch the stock as well. Thank you so much for joining us, Rene.